Hi, hello, aalia. This is me, Sandy Gillis, the tutor of John Nang. I finally got around to giving you the basic introduction to stocks. Yes, you want to learn how to trade during the day, but potentially a more important skill is to be able to invest in good stocks that will be moving up year after year for many, many years. So that would be the first basic skill. The one of trading would be, I think it should come after many years of investing patiently in stocks that you add to your portfolio as building blocks over time. And then only later, after maybe 5 years of experience, then you will be able to trade the ups and downs of those very volatile stocks. I think it's important first to put building blocks to buy stocks for months and years and then watch them move up 7 to 14% per year. So let me explain first the by PowerPoint what stocks are all about. Here we go. There's a PowerPoint that goes with this. It's on the other video that I recorded via Zoom. Now, so the first page is yields in 2021 Philippines, meaning this is how money grows. If your money is in a time deposit, it earns 1% or 1.5. If it's in a 1 year treasury bill, meaning you lend money to the Philippine government, they pay you 2% a year. There is such a thing as a Philippine dollar bond, whereby the Philippines borrows money in dollars from people, whether in the Philippines or abroad. And for those loans, the government pays 3% a year. And then for the 10-year Philippine peso bond, that's a 5% for normally 5 years, sometimes 10 years, sometimes 25 years. Meaning the Philippine government wants to borrow money for uh, 5 or 25 years, and they're willing to pay 5% a year. And that promise is usually kept. So you can rely on the promise that you'll earn 5% a year. Meanwhile, there are corporations that borrow money from the public and they pay 6% a year. And other methods, 7%, that would be stocks. Because if you need to earn more than 6% a year, you'll need to go to stocks. Bonds can only go up to 6%, and above that would have to be shares of stock. Now, inflation is 4.2%, so therefore, even if you earn 6 minus 4.2, you only get 1.8. So and that's not so nice. I've measured Philippine stocks for the past 33 years, and they go up between 7 to 14% a year. Some years they go up more than 14%. Other years they go up less than 7%, sometimes below zero. But the average is between 7 and 14. Now, in 2020, the stock market took a dive, but then it immediately got back up. It went up to 7,000, and now it's 6,400 points on the index. The index is a number that started at 100 back in 1984, and then it was at 600 in 1988. And then it was at 1,000 in the year 2000s and 2,000 in year 2009. So now we're at 6,400. This stock market has gone up over time. I also, because I'm in Australia, I recently gave a talk on Australian stocks, noting that some of them go up 5% a year consistent, and some of them are going up 29% a year, like BHP Billiton and a company called CSL Biotech. Now, I recommend you join my Facebook group on basics on stocks and investing, and I upload a copy of this PowerPoint up there, and then later I'll upload the YouTube video, and you can freely download the files. Now, we want to invest in stocks because we want to make our money grow. Our concerns are that the money has to grow above inflation, and you lack time and you lack the money to pursue all avenues for making money grow. But you do have to make that money grow. So you need to save money and then invest it to grow more than 7% a year. So these are some of the requirements for the average worker to save money for. There's a need for emergency money all the time. We need to have emergency money. There's children's needs, Life insurance, my retirement, capital for a potential future business, and legacy for the sake of the grandkids. These are your money concerns now, 5 years from now, 15 years from now, 30 years from now. And for 15 years and beyond, mas bagay ang stocks. It's really more suitable because it's based on the growth of the economy and the growth of net profits of the companies. Meanwhile, the bonds is based on the promise of government to pay back at 5% or the promise of corporations to pay back a loan at 6%. It's different with stocks because you're betting on the economy going up and then the corporate profits going up, and then you participate in the growth of the economy and of corporate profits. So, for example, you have money today and you want your investments to grow a certain growth rate per year, but you're concerned about the evil of inflation. If inflation is 4, you need to make your money grow a lot more than 4, maybe 12. So that 12 minus 4 equals 8 in real terms. So therefore, if you manage to get 12% on your investments and you subtract the 4% of inflation, then in real terms, you'll have 8% growth in your portfolio. This will take care of your expenses in the future. I really recommend investing long term. And for trading stocks back and forth, I would say put 20% of your money in trading portfolio and 80% in the long-term investment portfolio. Long-term meaning 3 years and it goes up. 6 years, 9 years and it goes up, as long as it goes up between 7 and 14% per year. So buy good stocks, invest in good funds, be brave and trust the system, have faith in the economy, whether the Philippine economy or the US economy. You'll probably be wanting to buy US stocks. And then rewards come after many years. Look for look to make 20% per year for 20 years, maybe even in US stocks or funds. So these are the long-term concerns of a good investor. In the first place, look below, money for me and family projects. For that, I target 10% growth over 10 years. Money for my grandchildren. You have no, I mean, most young people do not have children yet or grandchildren, but you want to start saving now for that eventuality. Target 15% growth over 15 years. And then for great great grandchildren, which will come like many, many years from now, set aside money that will be targeting 20% growth for more than 20 years. Really think long term because Philippine stocks are always positive long term. Short term, they might be negative, but long term, they're always positive. Our stock market index is a number that started at 100 in 1984, and by year 1988, it's 600 points. The points refer to how much higher over the starting point of 100. So 100 was the starting point, and 100 refers to the size of the market value on that day in 1984. On that day, the market value of the stocks was so many billion pesos. Now, instead of talking about we were X billion yesterday and we are X plus 1 billion today, and maybe we will be X plus 2 billion tomorrow, cumbersome. They started to equate the billions of pesos of the stock market in 1984, set that equal to 100. Yeah, so that if it goes up 1% the next day, then the index would be 101. And if it goes up another 1%, the index would become 102. So by the year 1988, it was 600 points. And now we are at 6,400 points. That translates to 7% per year for 33 years, meaning it almost sure to be positive over long periods of time. If you're talking about a few months or a few years, it might still be negative for a few years, but always long term, it's upwards. So that's the lesson from wisdom. It's nearly always positive over long term if you invest long term. I even have I have a note here from Australia, 6% a year for the past 9 years. Skip that. Okay. And what is a share of stock? It is the proof that you are part owner of a corporation. You want to be a part owner of SM Investments or Ayala Corporation? You may. In fact, you are encouraged to be a part owner so that you can earn cash dividends. And they're happy that you buy shares of stock because you give them money indirectly. In the beginning, when a company sells shares, it wants to raise money for business. So they sell the shares, they get money, and they use it for business. Now, if you bought the shares, you will get a piece of paper which is a stock certificate. It proves that you are part owner of a company. Remember, you are now the owner, one of the owners of the company, and not anymore just a customer or someone who works there. You'll be one of the owners. A stock certificate is proof of part ownership. And if it's a good company, the share price will hopefully go up over time. And it should also pay cash dividends over time, year after year, it's hoped. So our task is to select the top 10 stocks which give promises of good growth over the years, over the next 10 years, plus good cash dividends. Example would be Metrobank Manila Electric pays good cash dividends. Petron, not so much. The new style of stock certificate is the plain paper certification that you are the rightful owner. Where to go to buy stocks? You go to the Philippine Stock Exchange in Bonnie Global City. You can access it electronically nowadays, but that's where buyers and sellers gather electronically to trade shares of stock. Buyers and sellers, buyers and sellers. The buyers want to buy cheap and the sellers want to sell dear. So they're constantly fighting each other. Oh, I want to buy at a lower price. And this one says, I want to sell at a higher price. So they see if they can agree on a price. What happens when you invest in shares of stock? You give money to the company and then they use the money for their business. And it's hoped that at the end of the year, they can have more sales. If they have more sales, then they can have more profits. If they have more profits, then they can declare cash dividends, meaning we'll give some of our profits back to the shareholders as a Christmas gift. So you receive in your broker account, suddenly there's cash there. Thank you very much from the company that you whose shares that you own. Now, what do you call that share in net profits? It's called cash dividends. Out of the net profits of the company per year, they allocate a portion as cash dividends and they give it to the shareholders. If you own 1% of the stock, you get 1% of the cash dividends. And because companies give nice cash dividends, their shares become more and more desirable. People want to buy those shares because they give nice cash dividends. Imagine if your share of stock is worth 100 pesos and then the cash dividend is 5 pesos. So 5 over 100 is 5%. That's better than savings account, right? And the common shares become more desirable because of the cash dividends. And because they're desirable, the price of the common shares goes up over time. Example of good cash dividends would be Meralco, 5.5%. There's PLDT Tel, 6.7%. 6 to 7%, and Globetel 6 or sometimes even more than 6%. Now, aside from the cash dividends, the price of the shares also goes up over time. So, would you like your money to grow 18% a year? Can be done. Buy Meralco shares at 20 pesos in 2005 and hold them until it's 274 or around 300 in 2020. That means it's gone up 18% per year for the past 18 years. That's quite good, right? That's why I'm telling you that it's sometimes beneficial to think long term, to buy a share of stock and hold it for 18 years because you cannot forecast the wiggles of the ups and downs of the share price, but as long as it's generally moving upwards over time, buy that share of stock and wait a long time. So even if it wiggles in price, it's still generally upwards. Okay, and I think your basis for buying Meralco is that everybody needs electricity. Next is PLDT. Together with Globe Telecom, everybody needs telephones and internet. But PLDT share price has gone from 800 to 3003 down to 1207. And you need to do research to check if PLDT share price and net profits might go up. If yes, then that share price can go from 1207 back to 3,300 over the next 8 years. Could be. You need some good timing. There's Globe Telecom. It's gone up 10% per year for the past 23 years. It used to be 200 pesos. Now it's 1,925. That means if you bought it 23 years ago, your money went up 10% a year. I recommend you do that. You buy stocks and hold them for many years. Right? Investment gains are good, and they also give cash dividends. Ayala Corporation, that share price went up 14% a year for the past 18 years. So go ahead and buy that stock for the next 18 years. Buy it at 900 and wait until it's 8,000 pesos, for example. I think it's headed up again because it's a well managed conglomerate. Another good stock is SM Investments, also well managed. The share price has gone up 15% a year for the past 15 years. Look, it used to be 115 and now it's 964. So much higher. It's constantly moving up. Okay. And then International Container Terminals. That's another good stock that you could buy. It's now 124. It has gone up 24% per year for the past 18 years. It used to be 2.5 pesos, now it's 124. Where could it go? 150, 160, 200. There's Wilcon Depot, one of my favorite stocks. It was issued at 5.5 pesos in year 2017 and now it's 17.6. That means it went up 34% per year for the past 4 years. And it still is pointing upwards. Next is let's understand the top 30. This would be Ayala Land, SM, BPI, and various blue chip stocks. The top 30 are the blue chips. You can buy them at the stock exchange in Bonnie Global. That's where they trade. And I suggest that for you, stick to the top 30 or those near them in quality and ignore for the time being the other 243 stocks. The top 30 are the biggest in market value and also they have the most trading activity. The rest are rather dormant. Here's a list of the top 30, starting with the top 10. SM Investments on top. PLDT, they're number 10. Excuse me. Then next one is Universal Robina down to Metro Pacific. And then next is GT Capital down to DMCI Holdings. So these are the top 30. After that would be number 31 up to 273, the rest. Now let's look at the progress of the top 30 stocks. They were low in the year 1988 and they've gone up all this distance to 6,719 or 6,400 recently. And I think it's headed up again to 8,000, 9,000. So you can buy now at this point in time. From 1984, it went up from 100 points to 6,400. That meant it went up 64 times higher. And the prices plunged in the year 2000 from 8,000 down to 4,000. But then it went up to 7,000 and now it's down to 6,004. So buy it at 6,004 and wait for it to go back up to 9,000 and above. How bad were the other market declines? Same thing in the year 2008. The stock market was cut in half. Market value went down 50%. But then after that, stock prices went up 390%. So down 50, up 390. Right? So it even hit an all-time high of 9,000 points on that index. Was 2020 a bad year? Yes. But are stocks always bad? No. After a bad year can come a good year. So don't just trade short term. Go long term because you can catch the long term trend of stocks. And I've measured the index stocks, the top 30. They've gone up either 7% a year or 14% a year. Excuse me. And 7 and 14 are better than the government bonds earning 3%. Better than inflation earning, which is 4%. So there's no need to be afraid of stocks or don't need to be afraid of bad times. Just invest long term in stocks because they tend to move up faster than government bonds. 100 points for the index in 1984, 600 points by 1988, 1,000 points by 2003, 2,000 points by 2009, and then 6,400 points for the top 30 stocks in 2021. So there we are. The index points kept going up and up and up. And remember that the index points the was started in 1984. They counted the market value of the top 30 stocks and set that billion peso number as equal to 100%. And then if it kept going up beyond that, then it would be 101 or 102%. Excuse me. SM Investments is 1,034 pesos per share, and you multiply it by 1,205 million shares. That means that you get a market value of 1,246 billion pesos. Right? That's $25 billion. And this refers to the shares listed in the stock exchange, which is 40% of the total. Meanwhile, the C family holds on to 60% of the shares. Then you have Ayala Land, which is 37 pesos per share, multiplied by 14.73 billion shares equals 540 billion pesos market value, or equivalent to 11 billion US dollars. Now, the shares listed on the stock exchange are 52% of the total. The Ayala family holds on to 48% of the shares, which are privately held. Then there's JG Summit. Share price is 63. Number of shares is 7521. The market value is 474 billion pesos, or $9.6 billion. And this is for the shares listed on the stock exchange, which is 40% of the total shares. For each stock, you get the share price multiplied by the number of shares, and then you'll get the market value of the stock. So you add up the market values of the top 30, and then it's going to be billions. Set it equal to 100 points, and then that's the start of the index in 1984. Whatever was the value of the top 30 stocks, they set it equal to 100 points, and then they started from there. If the following day shares went up 1%, then the index would be 101 points. If the next day they went up another 1%, then the index would be by now at 102 points. All right. Okay. Fast forward this one. Here's what the index looks like on a chart. Low in 1981, went up 1994, down again to year 2000. And then after the 2008 crisis, it charged up very far to 9,000 points. Okay, so do you think it'll keep on moving up like this in a straight line? That's the optimistic version. The more pessimistic one says that it'll be moving sideways for many years before it manages to move up, perk up and move up. Now, what do you think is the dominant force in the stock market? If you think that the dominant force is downwards, then there's no point in investing, because that means that share prices will go lower before going higher. In which case, it's not worth investing right now. Better to wait for better times. Now, what if the economy regains 6% growth? Well, people will find a way up. People will find a way to get work somewhere in the world. Or they will happily invest their savings. Now, stocks to buy for the Philippines would be infrastructure, consumer, banks, and telecom. These are the infrastructure stocks which are good. You can buy them. And then these are the consumer stocks which are basic necessities. They're also good. Banks are also able to do business in spite of the lockdowns because they're online. And then telecom and internet is essential service nowadays, even more essential than electricity sometimes. No, exaggeration. Electricity is more basic. This is a chart of Manila Water where you can see that the share price used to be 6, went up to 40, went down to 15, and who knows, it might find its way back to 40. This is Bloomberry Resort, so it's a terrible zigzag, and but it's coming to a head. Okay, so meaning we don't know if it's going to break out on the upside or on the downside, but we're ready and waiting. So if it goes up a little, then it means that ultimately Bloomberry Resorts will go up in price. I work for First Metro Securities, and its sister company is First Metro Asset Management, which sells mutual funds. Our website in First Metro Securities allows you to buy stocks as well as mutual funds. Now, these are some of the mutual funds that we represent. If you want to learn more, dial the office. Too far for you. Email the office in the Philippines, customer service at firstmetrosec.com.ph, or from any Philippine number, dial 02-8859-0600 during office hours. So this take stock. This is you, your assets today. You have a strategy, must develop a strategy to achieve your investment objectives. For example, you might state your objective is to make my money grow 12% a year or 15. Now, are you going to do it yourself or go through stockbrokers who give advice, or financial planners who give advice? Most probably you'll do it yourself first. And it might be useful to hire a financial planner to guide you through the maze one of these days. The basic assignment is to take your savings today and then look at your future income and then check if it's enough for your future expenses. If it's lacking, then you might need to work harder, earn more money, or invest your idle money to grow at a faster rate. Right? So you divide your money into various pots or various parts, and then let this savings or investment take care of this future investment. Right. So there's a vehicle for this objective number one, another vehicle for objective number two, and another vehicle for objective number three. It's almost like you're sending mail out to the neighborhood. If it's near, then use the bicycle. If it's far, use the ship. If it's urgent, use the airmail. There. So for additional information, the stocks become listed through an IPO or initial public offering. And after that, they can still offer additional share offerings via stock dividends or rights offerings. And this one, IPO, comes after the stage of venture capital or private equity. Venture capital means investing in small companies that don't even have sales. And private equity is investing in small companies that already have net profits. So, pahabol information is that Double Dragon is going to issue an REIT, or has issued Real Estate Investment Trust. This means that you can buy, that the REIT will buy some of the properties of Double Dragon, which have tenants who pay rental income, and the rental income will be shared to you if you own the REIT, the REIT. Ayala previously tapped the REIT or REIT to snag foreign cash for the Philippine office boom. If the REIT buys the property from Ayala Land, then Ayala Land has cash for building new properties. In the meantime, the owners of the REIT will gain cash dividends. So here's an example of the property that's owned by the Ayala REIT. It generates lots of rental income. Same with the Ayala North Exchange and the McKinley Exchange. They generate income that is tenant rentals. So what happens is that a developer puts up a building. The developer owns the building for investment. Tenants pay rent, and the rent is good income on the investment. It's the real estate investment trust that buys the building and starts collecting the rent from it. And then Since you're part owner of the real estate investment trust, you get a share in the cash dividends, which could be about 5.5% per year. This rent is normally good income from such an investment. Okay, so the REIT raises money, REIT buys buildings, the REIT collects the rent for now, and these buildings have tenants who pay rent. Yeah. So again, visit my Facebook group on Basics on Stocks and Investing, and visit the website of the PSE. Uh, is it big? It's got $243 billion in market value. But a single stock in the US called Google has 1.4 trillion in market value. Compare that with our 243 billion. A single stock in the US called Apple at $124 per share uh, is still worth $2.1 trillion. Oh, hey, that's enough for today. I want you to visit this website called Investograms, and then to look at the charts, and then to ask how to build a portfolio. Ask them how you can build a portfolio. You can learn. See, there are lessons on how to start investing, how to find good stocks, finding the right time to buy and sell. I'm going to record for you a video how to choose good stocks. You don't have to follow their advice, but you could browse over this website, Investograms. Let me see. I think I had a portfolio here. Multi-chart portfolio there. Some stocks which I bought some time ago. Let's see, where's that? Ah, okay, it must have expired. Okay. But this is, if you click on portfolio, then you can build a portfolio of, say, 300,000 pesos. And then you can invest the 300,000 pesos in various stocks as practice. This is really practice money. Remember, so go to Investograms, but also go to First Metro Securities, where you can um, get good charts also and get good research. So you click on the research tab, and then you will see the various articles that you can read about it. First Metrosec research, there are plenty of company reports. And then open an account if you can, but also open an account with Investograms. It will teach you a lot of things. Okay, so all for now. Cheers.